Well, the stock market made some pretty good gains last week. Does that mean that the stock market crash is over? Well, I'll show you how to answer that question. Plus, we'll go through all the markets and I will do my day trade of the week on AMC. All right, so pretty good gains this past week for the stock market. I would say it was more a case of the sellers being less motivated than the buyers being really motivated. It wasn't on heavy volume. You saw stocks just sort of grind their way higher. But the charts tell us whether this is the end of the crash. And if you've been following me for a little while, you'll know that we've talked about the importance of breaking a downward trend line from a rising bottom. So let's jump to the daily chart of the S&P ETF. The symbol is SPY. And I'll just draw a quick little trend line across the tops, and you can see that that has been broken. So that's a positive. You can also see that there really wasn't much of a rising bottom. There was a slight one there. So that's sort of a mixed bag in terms of what the chart says. But the bigger issue is that these longer term downward trend lines are still intact. I think what we saw last week is a market bouncing back from being oversold, having gone down on emotion, on fear, and then people sort of rationalize it. Some people come in and they bargain hunt. They say, oh, well, this stock fundamentally is worth more than this. The market has pushed it down too far because of emotion, and you get that little bounce back. So I think it's a good first step towards ending the weakness, but there's a few things missing. One, we didn't have that emotional high volume panic sell-off day that often marks a bottom. Second thing is we still have these downward trend lines that I've shown you on chart that still need to be broken. And so in the big picture, again, it's a positive short-term signal, but I don't think we have that strong signal that the market is over this selling pressure. It's possible, but I don't think it is yet probable. Now let's take a look at some of the other charts. We'll start off with an intraday chart of the S&P ETF. And for that, I just go to the top of the Stockscores chart here, click on 1M, and then I can make that a 60-minute chart. And there you can see the downward trend line. This is the hourly chart, breaking from a little rising bottom. Some might call that a head and shoulders bottom with a neckline there, or perhaps the neckline there. So we've got a positive signal on this short-term chart, and I do think we could see a little bit more strength in the days ahead. But notice that the sentiment stock score is still quite low. That 39 indicates that the sellers are still in control of the market. And you can see that when we look at the weekly chart. The long-term upward trend was broken a few months ago. We then built a falling top. We've been breaking down through support. And what's important right now is this downward trend line is still in place. Yes, we had a good little bounce back this week, much like we had a good little bounce back 2 months ago. But until we can break that downward trend line from a rising bottom, I really recommend you be cautious with stocks in general. Now, there will be sectors of the market that can do okay. Let's jump over to the NASDAQ, see what tech stocks look like. It's going to be a pretty similar picture. So I go to the upper left here and type in the symbol QQQ for the NASDAQ 100 ETF. And on the daily chart, you see a very similar picture to that of the S&P, breaking that downward trend line, but no real rising bottom. Still, the sellers are in control. I also like to take a look at the small cap stocks, the Russell 2000, and there's the downward trend line. We've broken the steeper downward trend line. I think we're probably going to get up to here, get stuck, pull back, and then the question is, do we go to new lows or do we build the rising bottom and break that downward trend line? So that's what we're going to watch for. That's how we will know that this bear market in the small caps in particular, but in US stocks in general, is over. So we'll keep an eye on that. All right, let's jump to the Canadian market, which has quite a different chart. And that's because, of course, the Canadian market has that heavy denomination of energy stocks, and the energy sector has been the one safe haven in this market. So you can see it pulled back for a few weeks. It's come back to support, but it's just generally stuck in this sideways neutral trading range. If we start to break down through these lows, then that would be more of a concern. So if that happens, that's a worry. If we can manage to come up and break out to new highs, well, then that would be a positive. Either way, right now, kind of a neutral situation as this market is stuck in a sideways range. Let's jump to some of those commodities which are so important for the Canadian market. And here first is the chart of the oil ETF, USO. And you can see that it has broken out this week. On Thursday, it broke out from an ascending triangle. Now, volume is pretty light, so there's not a lot of enthusiasm behind this move. This is more just a continuation of that long-term bullishness that exists in the oil market. If we look at the 3-year weekly chart, you can see that we've been in an upward trend for 2 years and breaking out from that little ascending triangle. I think oil is more likely to go higher than lower, can get up into this trading range where it'll get stuck, but for now it looks fairly good to me. How about gold? Gold, of course, affected by the US dollar, which has been strong, and you can see that gold has been moving in this downward trend for a while. Now, in the last couple of weeks, we've seen a little bit of strength. We broke this very steep downward trend line, but we're still inside this downward trend line. So what I see here on gold is more a case of, a little bit of bargain hunting, some short-term trading opportunities in the mining market, but there's no long-term bullish signal for the gold stocks. And therefore, if you're a trader, day trader, swing trader, yeah, there's probably some opportunities in that area. But if you're looking to buy things for the long term, I just don't see it yet. I think there's still work to be done. All right, let's take a look at some of the currencies I like to track. We'll take a look at the US dollar. And as I predicted, the US dollar has pulled back the last few weeks, and primarily because it went parabolic. And we know that when trends go parabolic, they usually correct back down to the trend line. So we're seeing that happen now. That correlates with interest rates coming back a little bit as well. A lot of the worry that interest rates were going to go through the roof. They did go up a lot, but they probably went up too fast, too emotionally, and now we're seeing them correct a little bit, the US dollar correcting back. Doesn't mean the trend is broken, and that's the important thing to recognize here. This trend line is still intact, so we can still say this is a bullish market for the US dollar. It's just taking out some of the fluff, some of the emotion. It should bounce off of that trend line, and then we'll see. Do we go into a sideways range, much like oil was in for the last few months, or do we build a falling top and break down through that? I'll keep you updated here each week with these videos. That's why it's a great idea to subscribe. You'll get a text message, an email, as long as you have your notifications turned on. So every time I upload these free videos, you can get a sense of my view on the market. All right, let's take a look at Bitcoin, which is obviously followed by many traders. And the Bitcoin chart is pretty ugly. Let's take a look at the 3-year chart first. And of course, we have falling tops. That means the sellers are in control. But more importantly, we've broken down through support. And I think Bitcoin more likely to go lower than higher until we can see the build of a rising bottom, the break of a downward trend line. All of those things I talk about every week, we shouldn't even think about buying this. It's still stuck in that downward trend. And you can see that we are consolidating downward towards support, and that could lead to another breakdown in Bitcoin. So please be very cautious with the cryptocurrencies. They are out of favor right now. That can change very quickly, but again, I do this analysis every week, and I will always let you know when we see that turnaround. All right, so if we jump into my ratings then, US stocks, long-term bearish, short-term neutral. We are seeing a little bounce back. Canadian stocks, long-term neutral, short-term neutral as well. Gold, long-term neutral, short-term neutral. I think that maybe gold is trying to bounce a little bit off of long-term support, but there's work to be done. Oil, bullish on both time frames. The US dollar, long-term bullish, but short-term bearish as it is working its way back to that trend line. And Bitcoin, bearish on both time frames. All right, now we're going to get into the day trade of the week. I haven't done this for a few weeks and had a lot of people asking for it, so let's get back to that. And day trading is actually pretty good in this market, despite the fact that the overall market has been moving lower. Every day there's a number of stocks that can be day traded. We do that in Active Live on Stockscores. And this is one that we had on our list on Friday. It is AMC, and we know this stock is a meme stock. It gets followed by a lot of people, so I'm always eager to watch stocks like AMC, GameStop, BlackBerry, because they get that following, that large crowd. And what I like to see with this particular strategy, which is called a superhero strategy, is I want to see a stock that's in play, that has very strong liquidity, abnormal volume, and then just simply look for my action candle indicator on the 1-minute time frame breaking out from a predictive chart pattern. And we see that Here, there's the action candle. Any pink dot is an action candle, but we only like the ones that are breaking out from a good pattern. So here we have a little pennant pattern, that's pretty good. Here we do not have a pattern, so that's not good. And here we have a really strong break from an ascending triangle. So the economics of that trade, your entry's here, your stop is there. It is 900 share position for $100 of risk. That's $12,000 of capital, but you can margin a stock like this 3 to 1. So you only need to use $4,000 of capital to take this trade with $100 of risk. If you wanted to take $200 of risk, then you would take an $8,000 position, so on and so forth. That earned, at the end of the day, a 9 RR gain. RR stands for reward for risk. These are all things that I teach in the Active Trader course, which you can learn more about at Stockscores.com. That's a $900 profit on a $4,000 capital outlay, 22% return on a one-day hold. And these are the kind of trades that you can find every day. There's 1 to 5 a day like this, where it's that abnormal behavior, strong liquidity. We just be patient, wait for those patterns to build. Even when the market's moving lower, we've had some stocks make big gains as the crowd gathers around some rumor or significant fundamental event. All right, well, we'll leave it there. Hope that you've enjoyed this, and if so, subscribe to the channel, hit the like button. Leave a comment, let me know what you think about day trading in this market right now, what's working for you. I always read those, and I love to see the feedback. Hope you've enjoyed it, and trade well.